Dear students, welcome you all for the 7th session of the first chapter of GST. So in this session we are going to discuss basic schemes of GST. So my presentation will contain two schemes, that is regular scheme and composition scheme. So let us discuss the various schemes of GST. So basically there are two schemes of GST, one is regular scheme, another one is composition scheme. So let us discuss one by one regular scheme in detail. So what is regular scheme? So regular means it is regular for everyone. So SSC is liable to follow all rules and regulations as per GST Act. So under this scheme, if any SSC is registering under regular scheme, he has to follow all the rules and regulations as per GST. So there is no exception as such. The maintenance of books accounts, then filing returns, issue of invoices, payment of tax as per GST Act. So he has to maintain the books of accounts, he has to file the returns as per the GST Act, he has to issue the invoices as per the GST norms, and then he has to pay the tax as per the GST norms. So everything as per the GST Act. So applicable to those who are not covered under composition scheme. So only one exception is if you are not opting for regular scheme, then there is another scheme, composition scheme. So if you are registered under composition scheme, then you are not required to follow all these rules. Now let us discuss in detail liability to register under regular scheme. So who is liable? So every person who is registered under existing indirect tax laws being subsumed in GST. So as we have studied earlier, there are so many taxes which are subsumed under GST, such as central excise, central customs, then central sales tax, then interstate sales, then state sales. So these are then service tax. So all these taxes were subsumed into one tax, that is GST. So every person who is paying all these taxes have to pay or how to register under regular scheme. Then second one, every person whose turnover in a year exceeds rupees 20 lakhs. If the turnover, in the sense for goods it is sale, for service it is the total value of the services, exceeds rupees 20 lakhs, he has to compulsorily get registered under regular scheme. And 40 lakhs for special category states, especially northeastern states. Then third one, voluntary registration is also permitted. If any person voluntarily wants to register in both these conditions, if he has not fulfilled, but still if he wants to register, then voluntary registration also is permitted. Then mandatory registration. So who has to compulsorily get registration? So first person is person making interstate taxable supply. If any person or any trader who is making interstate, that is between two states, any supply, then he has to compulsorily get registered under GST regular scheme. Then person required to pay tax under reverse charge. Reverse charge means if a person purchases any goods or services from a trader who is not registered under GST, then under these circumstances, the person who has sold the goods to the dealer will not be able to pay tax because he is not registered. So under this scheme, the person who purchases the goods has to pay the tax. So that is reverse charge. So instead of making a supply, when you make the supply, you pay the tax. But here it is reverse. When you make the purchase, you have to pay the tax. Then casual taxable person and non-resident taxable person. Casual taxable person means a person who makes a casual deals or casual trading or casual supply of goods. Okay, he is not a regularly dealing in goods. So he is making the transaction on occasional basis. And non-resident means who is not resident in India as per the income tax rules. They have to compulsorily get registration under regular scheme. Then e-commerce operators. So any e-commerce operator who is collecting the tax or who is deducting the tax on the spot or on the source, they have to compulsorily get registered under GST Act under regular scheme. So e-commerce operator means Flipkart, Amazon, all these are e-commerce operators. Then person supplying goods through e-commerce operators. So there are dealers who are supplying goods through e-commerce, through Flipkart, through Amazon, or through other e-commerce operators. So they also have to get registered under GST as per regular scheme. Then input service distributor. So input service distributor means here the person who is issuing the invoices for the service rendered for the branches. For example, if there is a head office in Bangalore and it has two branches in Chennai and Mumbai. For example, now head office incurs maintains all the software related softwares of the branches, software related issues. Now, for example, now software has been changed. Head office will incur certain expenses. Now, this expenses has to be shared with the branches. That is, the branches in Chennai and branches in Bangalore. So for that, so the head office will be now input service distributor. So they have to distribute the cost to each branch. So they have to also have to compulsory register under regular scheme. Now filing the returns. How the regular under regular scheme they have to file the returns. So there are three returns that they have to file on a monthly basis as per the section 39 of subsection 1 of the GST Act. So monthly three returns have to be filed. So first return is GSTR 1. So it has to be filed 10th of the next month. For example, if the April is the first month, next month means May. So before 10th May they have to file the return. Then GSTR 2, that is 15th of the next month. Then GSTR 3, 20th of the next month. So totally three returns per month. So total how many it becomes? So annual return. So there is an annual return also. One return has to be filed annually, that is GSTR 9, that is 31st of the December of the subsequent year. If the year is 2021, subsequent year means, so it has to be filed in the month of December 2021. Then total 36 monthly returns, then one annual return. Total 37 returns has to be filed by a regular scheme dealer. Then composition scheme. So if you are not registered under regular scheme, then there is an option, but this option is available only for the small traders whose turnover is below 1.5 crore. So they are given another option to register under composition scheme. So this scheme is applicable for small businesses, traders whose taxable turnover of goods is not more than 1.5 crore. So that means any small trader, retailer whose total turnover for a year does not exceed 1.5 crore, then they can register under composition scheme. So they have to pay GST at a fixed rate of on the turnover, that is 1% on the total turnover. Then hassle-free tax compliance. Here no much compliances as such. They need not file monthly returns. They have to file one quarterly return and returns are reduced here. Okay, they need not file 37 returns as such in regular scheme. Then features. So what are the features of composition scheme? So first one, a taxpayer whose annual turnover is less than 1.5 crore, then he is eligible for opting the composition scheme. For northeastern states and Himachal Pradesh, it is 75 lakhs. So that means it is available only for the small traders, because small traders may not to reduce the tax burden and tax compliance burden for the small traders, because if it is registered in regular scheme, they have to file and monthly three returns, and it is a burdensome for the small traders. So that's why here they can file a quarterly one return and annual one return. So burden is reduced for the small traders. Then business dealing only in goods can apply or opt for this scheme. So that means those who are dealing in services cannot opt composition scheme, but except restaurant sector is given an option, they can register under composition scheme. Now, taxable person registered under this scheme is not required to maintain detailed record as in the scheme of regular scheme. That means they need not maintain monthly three returns. They can file some annual return and some quarterly return. So burden is reduced. Need not maintain detailed record of the transactions or returns. Then composition's taxable person is not allowed to avail input tax credit of GST paid to his supplier. So this is the disadvantage for the composition taxable person, where input tax, that means whatever the purchase that he has made, for which if he has paid any tax, that tax cannot be deducted from the total GST paid. So this option is not available for the composition taxable person. Then fifth one, the following persons cannot opt composition scheme. So who are the persons or who are the traders who cannot opt composition scheme? First one, the manufacturers of ice cream, pan masala or tobacco. So any manufacturer who manufactures ice cream, pan masala or tobacco cannot opt composition scheme as per the GST Act. Then person supplying exempted supplies. If any person or any trader making exempted supplies, then he has to compulsorily register under regular scheme. Then suppliers of service, as I said, they cannot opt composition scheme. Then casual taxable person, so they also cannot opt, or NRIs, they cannot opt composition scheme, they have to opt regular scheme only. Then business which supply goods through e-commerce, so any businesses which supply goods through e-commerce cannot opt composition scheme, they have to opt for regular scheme. Then, so what are the conditions to be satisfied for opting this scheme? So there are certain conditions. Let's discuss one by one. So no input tax credit can be claimed. So there is no input tax credit which can be claimed by the composition taxable person. Then cannot make any interstate supply. So here composition taxable person cannot make any interstate supply. If he has to make interstate supply, then he has to register under a regular scheme. Then cannot supply GST exempted goods. If we want to make or supply exempted goods, then he has to get registered under regular scheme. Then pay tax at normal rates for transactions or reverse charge mechanism. That means whatever the tax rate available, so same rate tax has to be paid under reverse charge mechanism. Then if he has different segments of business, that means if he has 2-3 businesses, food business, then other businesses, maybe motor cars business or any other businesses, then he has to register all these 3 businesses into one business collectively, or he has to opt out, he has to register under regular scheme. Then he has to compulsorily mention these words, that is composition taxable person, in every bill that he gives to the consumers. So this is compulsory as per the GST Act. Then filing of returns. How many returns he has to file? So he has to file only one return quarterly. That means 3 months one return is enough. So in regular scheme the trader has to file 3 returns per month, but here burden is reduced. So GSTR 441. So GSTR 4. So he has to file this return on the 18th of the next quarter. So GST 4 has to be filed by the composition taxable person on 18th of the next quarter. So next quarter in the sense, for example, April, May, June is the one quarter. So next quarter means here July. So before July 18th, he has to submit the GSTR 4. Then annual one return. So there is one return he has to file annually, that is GSTR 9A, that is 31st December of the subsequent year, that is as the date given to the regular scheme, the regular taxable person. Then total 5 returns in a year. So that's all for composition taxable person. So this is what we have discussed, basic 2 schemes in this session. Hope you like this session. So thank you for watching this video.